burning issue. We saw that debate earlier. Now let's get into the currency. After a week of scary declines, the rand began something that looked like a recovery today. It strengthened by more than 8% against the dollar, 2% against the pound, currently trading at around 16 rand 60 to the dollar. But the rand is still down by 7% for this year, after it plunged by more than 25% last year. That means more economic pain for South Africa. The weaker rand raising the possibility of another interest rate hike next month that will affect already indebted consumers, while combined with the drought, it's pushing up the price of crucial imports that now include food. So tonight we're looking at the rand, the economy and your pocket in Johannesburg. I'm joined by Owen and Nkomo from Nkunzi Investments. Good evening to you, Owen. And in our C Point studio we have the author of Maya on Money, Maya Fisher-French, and hopefully we'll have her, there we go, in the screen with us here in the Joburg studio. Good evening to you, Maya. Owen, let me start with you. So we're seeing this recovery today, but this level, 1660 or so, would still be an all-time low if it wasn't for that flash crash the other day. So I guess it's relative.
Yeah, it's all relative, Francis. I think it's definitely, we're trading at the lowest levels we've seen in a couple of weeks, really, in the sense that we haven't really traded here before. So we're trading at all-time lows in the currency. You may give it a range, 16.5 to 17 odd, and the big figure there that the rand is trying to avoid going beyond is 17. And I think that's what you're seeing here. We're seeing lots of sellers of the dollar in its 16.90, so the currency is not going above 17. But definitely very weak, in the environment we have definitely warrants for the currency to be this weak.
So Maya, you look at personal finances, how these big economic moves affect the man on the street who hears in the news another all-time low the other day, reaching nearly 18 rand to the dollar. What is the actual impact?
The impact is actually enormous, and it's really, really big, especially for your middle income and lower income earners. And I think a lot of people sort of think, oh, the rand only affects me if I'm going on an overseas holiday. But the reality is that South Africa imports a very large amount of what we consume. One of the big ones being oil. And we've been very fortunate with this rand collapse over the last year that oil price has been dropping massively. The oil price is down about 55% in its currency is based in US dollars. So we're very fortunate. We've been protected from that to a large degree. But I think what economists are becoming very concerned about is food inflation, because as we've seen with the drought in South Africa, we're going to have to start importing at least half of our maize. We're going to have to start importing meats. And basically this weak rand is going to fuel higher food prices, which is going to really impact the consumer's pockets. We also know that economists are expecting more aggressive rate hikes of probably about 0.5% in the next, or 50 basis points in the next MPC meeting, simply because they're going to have to work ahead of this inflation, what we call an imported inflation, because of the currency. So this fall in the currency will have a big impact on South Africans.
Owen, what are you expecting at the next rate meeting?
Look, I think we're looking for 50 as well, and I think that by the end of the year we will not have had less than 1% in interest rate increases. And this also will depend on where the rand ends up. If the rand continues to weaken, I believe that Governor Kganyago will do the right thing and unfortunately increase interest rate so that we can at least cushion ourselves from exorbitant inflation. And like Maya was just saying, that we're importing most of the inflation because we're still importing stuff. We have to import about 50% of the grain that we need in the country because of the drought, and it doesn't help us at all.
Isn't this the real disconnect, that we're raising interest rates, which constrains spending at home because you can borrow less money, so you spend less in the stores. But like you and Maya are saying, the inflation that's coming in is actually imported. But I guess this is all we can do, Owen.
Most definitely, that's the only thing that the governor has as an instrument to use. If it does not increase the interest rates, he only makes the rand more vulnerable to the weakness that it's been showing of late. So I do think it's going to be pushed towards increasing interest rates, just to make sure that at least the rand can perhaps have some level of, sort of stabilization, if I can call it that. But unfortunately, we are always price takers when it comes to the currency, because our price is determined elsewhere, also by global influences and things like that. So unfortunately, the consumer is going to be punished by higher interest rates. Let's just hope it works, because in the long run, if we're in an environment where we're going back to levels of interest rates that were at 15%, then we know that the economy is going to just worsen.
And that's just a scary prospect, isn't it, Maya? If you're in debt, is there anything you can do?
Well, I think first of all, and it's a point that I think we don't make enough, is that there are also savers in the country, and especially pensioners, who actually rely on interest rates, and they've seen a massive reduction in the returns that they've received from their deposits. And in fact, we're running very low real interest rates relative to the history of the history of interest rates. So actually, on one hand, I feel the pain. I have a mortgage. I certainly don't want to see rates going up. But on the other side, the savers have really been punished by maintaining these very low interest rates for as long as we have. So I think that some sort of balance did need to come back. But I think certainly if you have, I say it all the time, you've got to try and pay off your debts. But if this should really, I think, make people realize that they need to be focusing on debt repayment. But I think more importantly, it's not just going to be about debt repayment. It's going to be really about going through your budget, seeing where you're spending your money, because things are going to become very tight this year. Higher interest rates, higher food prices. We're expecting more electricity prices to come through. If this drought's anything to go by, possibly higher water prices as well. They're certainly threatening that in the Western Cape. So I think generally the consumer across the board is going to find 2016 a very, very tough year.
Oh, and let me come back to this flash crash that we saw earlier, because I remember when the financial crisis hit, people were talking about the fact that machines are used to trade now. So you have this effect that creates more volatility. They were talking about that in Japan the other day. So the rand starts weakening, and then everybody starts selling at the same time because it triggers something called a stop loss. Yeah. Is it becoming more technical? And are we very vulnerable because the rand is this unique currency, one of the most heavily traded currencies in the world?
Yes, look, I think we actually became a victim of that liquidity on Monday morning around 3 o'clock, just before we woke up. So what happened is that Japanese traders, especially the retail traders, were forced into exiting some of their emerging markets currency positions. And as you said, it so happens that the rand is a better trader in the emerging market space compared to the Russian real and the ruble. So they decided to sell the rand, but unfortunately some people were still out in Cape Town with Maya on holiday, so they hadn't come into the market. So the guys hadn't started trading here at home, and some guys internationally obviously were not looking at trading the rand at that time of the night. And unfortunately, there just was so much volume to trade at a time with very limited buyers. So unfortunately, there was a big gap that the rand had to cross. Otherwise, when we came back into the market, we saw that gap being closed with more liquidity opening up. And unfortunately, as well, there were people who started saying, but geez, there's still the stuff that we experienced last year with Renegade, etc., but I don't think that there was a direct link in this time because of the fact that most of the trades that happened in Asia and in Japan as Asian retail traders were exiting their positions.
Okay, so if it's not our own goals, which sometimes we make, then it's China, the worries, or the US, so the interest rates going up there, less money slushing around in the world. Or now it's these Japanese traders. Before I go to Maya for a final word, is there anything we should do as a country? Should we worry about this? Somebody said the other day the rand's becoming a proxy for everything risky because it's so heavily traded on the world market. Should we worry? Should we try and do anything? Or should we ride out the storm as a country?
Let's just pause to consider some of the reasons why the currency has fallen. We've got a looming downgrade coming because of the vulnerability of our economy. The economy is not growing above 1%, and I doubt if we'll make 1% this year, given where the currency is. There's unemployment in the country, and we also happen to be, unfortunately, part of an asset class that is no longer favored by international investors, and that's emerging markets. All of those things are resulting in us being sold off. The rand has also taken a bit of pain on the back of the drought, because the drought is quite intensive, Francis, if I should say. because at this stage we're going to be importing a significant amount of grain and agricultural stuff that we can supply locally, and we're doing so at a very weakened rand. And that definitely doesn't help our dynamics. And I think the most important thing that the government and the good governor coming into the next budget can do, just be honest with the citizens in the country. We cannot afford to spend lavishly on some of the social programs, in my view. And I believe that we need to constrain government expenditure and possibly have a second look at the government base of employees. There's quite a lot of people that the government employs, which I think that unfortunately in circumstances like this, in economies where the government isn't too dependent on public opinion, you would see the government actually going ahead and reducing the public sector wage bill. And there's another thing that people don't talk about. As the rand is weakening, the government's liability on its international debt and local debt as well is increasing. So you'll find that all the money that Mr. Gordhan is going to collect via Treasury is going to be spent on servicing debt and doing stuff that's not going to help the economy grow. It's a very challenging position that he finds himself in, and I really hope he's brave enough to get South Africa to accept that we need to be very prudent.
So he has to say we're tightening the belt, even though we're already like gasping for breath. We have to do that. Maya, in finality, I don't know what you say to poor people, because we hear these predictions. It's going to be 20 rand for a loaf of bread. I don't know what you do about that. But what do you say to the savers who are hearing about these wild things on the market? Maybe you won't make money if you enter the market this year. Should you just have a nice little savings account, or should you give in to the fear and speak to somebody about investing overseas? Any tips?
Yeah, I think it's really important not to get caught up in the noise. And I mean, the point was made really about the rand being a proxy. Things move, markets move up and down, and because we're so exposed to the news, we're on Twitter and all of these things, we get a little bit caught up in the noise. And actually, if you're putting money away every single month into a debit order, with a debit order, and you're buying up shares or units in a unit trust or into an exchange-traded fund, you actually benefit when the markets fall, because you're buying them for cheaper, and you've just got to take a long-term view. You've just got to, every month, put your money away, put it aside, and know that when things do recover, when conditions improve, your money will be growing. So I would think it's really, really important for a long-term investor not to get caught up in the noise. In terms of offshore should always form part of a holistic financial plan as well. I mean, you need to look at seeing if offshore fits into your portfolio, why you'd be investing offshore. To only invest offshore because of the rand is not necessarily a good idea. We've already seen the rand blow out. How much more there is to come, we don't know. But are there assets? Are there better share opportunities, better companies to invest in overseas? And certainly at the moment, people would argue that sort of Europe and Japan are showing a lot of value, maybe more than some of the South African companies. But it should be a bigger, wider discussion than just the currency. So I think certainly I would advocate that, if you have that extra money, don't sit there being scared. People sit out of markets forever because they're always afraid. Just start putting the money in every month, and over time it will recover and it will generate returns.
All right, I wish we could continue with both of you. Unfortunately, too many heated debates today. Thank you, Maya Fisher-French in Sea Point, Owen and Cornwall here in Johannesburg. Hopefully we can pick this up at another stage. And I guess you heard it when it sounds like the world is just going pear-shaped. Don't give in to the fear. Just stay calm, breathe, and keep saving. Your news continues at 6:30.